The One Big Beautiful Bill Act has passed, the OB3 Act, and within it, there is an increase to the SALT cap. The state and local tax cap has been raised from $10,000 to $40,000. So let's go into what that means quickly through this video. One of the unfortunate consequences of the TCJA Act back in 2018 for many taxpayers was that it capped the state and local tax deduction at $10,000. What that means is everyone either takes the standard deduction or the itemized deductions. The standard deduction, it's hovered around, it's now at about $30,000 for married filing joint, $15,000 for individuals, in between there for head of household. So that's kind of where that is. So if your itemized deductions are less than that, you're going to take the standard deduction. Well, what goes into itemized deductions? Mortgage interest, that's the first one. That's the big one for a lot of people. They figure up their mortgage interest, they figure up their cash and their non-cash charitable contributions. If medical bills are high, if they're more than 7.5% of adjusted gross income, then you can start to tally those up and use those. But the last one that's in there, there's a few little ones, but the last one that's in there is the state and local taxes. So things like the taxes you pay to your state for state income tax, your real estate taxes paid on your personal house, your personal property taxes paid on your personal assets, like all of those go into the state and local tax deduction. And what happened was they said, okay, you can use the state and local taxes on your itemized, but only up to $10,000. So you might have $7,000 in mortgage interest. You might have paid $60,000 in state, local real estate taxes, everything combined, but you can only use 10 of it. So now you're at $17,000. Maybe you donated $3,000 to charity, you're at $20,000. Unless medical were really high, you were done. You weren't using the itemized, you were using standard deduction of $30,000 if you were married filing joint. So it shifted a lot of people to that. It shifted a lot of small business owners to using something called the PTE credit outside of the scope of this quick video. So we won't get into that. That still exists and it's still around, but let's just talk about what it means now that they've increased this SALT cap. So now it's increased. So you can take up to $40,000 for state and local taxes paid. So if you did pay $60,000 in state and local taxes, you can take 40 of those in your itemized. So it wouldn't be, you'd have 40,000 plus your 7,000 of interest plus your 3,000 of charitable. Now you're well over the standard deduction, right? So for high earners, this could have big tax implications that this is raised to 40,000. Two big items to know on this. It phases out for taxpayers with adjusted gross incomes over 500,000. So for the high earners, the really high earners, they're going to start to lose it again. It's gonna phase out. They're not going to get the deduction. So if you're under 500, you're good. If you go over that, you're going to start to phase out. When you hit a certain amount, you're not going to get any of it. So just know that if you're a very high earner, you may still be out of luck getting this. And then the second thing to know is that these state and local taxes, it is temporary. So it is set to sunset in 2030. So get it while you can, if you can, but it is set right now. It's set to sunset in 2030. So barring another act of Congress, another change, this will go away at the end of 2030. Now this piece, it doesn't seem big, but it will have implications for a lot of people. We'll be discussing it with all our clients in our fall tax planning meetings. I strongly advise you to, when you meet with your current accountant, your current CPA, if you're not meeting with them, schedule a meeting or find one who does meet with you. Strongly advise you to bring this up with them, especially if you know that it's going to impact you, especially if you know that you can benefit from it. But even if you don't, bring it up, see how it's going to impact you, get their take on it. They should have a good take. They should be thinking about it. They should be learning about it. They should have you well prepared to start to be in the best spot to get these benefits going forward. If they're going to pass new laws, if other people are going to benefit from them, if the big businesses are going to benefit from them, if Wall Street's going to benefit from them, then if you can benefit from them, you should too. And this SALT cap is a way that a lot of Americans can benefit from this, especially those kind of middle class, upper middle classes that are earning, in the high earners, but not quite over the 500, or even if they are and they're phasing out a little bit, especially if they're in high income tax states. This is something that you can potentially benefit from. It's something to take serious. Research it, know all you can about it, and plan for it.